This is Rebecca Petrie, paraplanner in the Houston office, and you are listening to the Ascent with Crestmont Private Wealth.
The opinions expressed are those of the host. The material is for informational purposes only. It does not constitute investment advice, and it is not intended as an endorsement for any specific investment. Visit crestmontpw.com for more details.
You're listening to The Ascent with Crestmont Private Wealth. This is Alec Walker, EVP of Financial Planning, coming to you live from our Houston office. And when I last spoke to you all, we were talking about the market. We were recapping first quarter market performance, and the episode was recorded right before we had a ceasefire, a little bit of peace talks between the U.S. and Iran with what was going on overseas. And really what we were talking about at that point, just as the same way, try not to overreact to 2 games down in a series. We're not going to try to overreact to the market being down, nearly 10% from its previous highs. We wanted to stay disciplined. And we sent out a chart just about a week and a half ago showing the percentage of the clustering of the market's best and worst days going all the way back to 2000. And many of you have probably seen a chart like this in some form or fashion, but the market's best and worst days tend to cluster together. This happened in 2008. This happened in 2020 during the pandemic. This happened in April of 2025 last year during the tariff tantrum, and it happened again earlier this year. And what the data shows on that, of course, is that if you miss the top 10 days, the top 20 days over that long period of time, it can significantly reduce the total return. I mean, just to use some round numbers here, a $10,000 investment in the S&P 500 made on December 31st, 1999 would have grown to $75,000, more than a 7-fold increase over that 25-year period. But if you had missed the 10 best trading days over that same period of time, you would only have $33,000, less than half of the fully invested result. So this is really important. And I think an area where, as Crestmont, as our financial advisors or fiduciary for our clients, is we try to sit on the same side of the table with our clients and help them through these difficult times, talk through the volatility, and help them remain invested. Because if we've talked about this before, the Vanguard value of an advisor, a lot of value that we can provide to our clients is on that behavioral financing side and helping them avoid making the big mistakes. And this is a great example of that, is what's happened. We've seen a pretty good bounce back in terms of performance so far in the market since the peace deals. And there was a great line that we had in this chart of the month, and I think this is really important, and that is selling during a decline locks in losses and creates a difficult reentry problem. And this is a core principle for us, trying to time the market. If you think about it in terms of a coin flip, you've got a 50% chance of getting a decision to either stay invested or get out of the market. You've got a 50% chance of getting it right. Well, once you make that decision, let's say you get it right. Well, now you've got that same problem of, okay, is now the time to get back in, or do I wait again? So let's say you have a 50% chance of getting that second decision right. That's a 25% chance of getting both the exit and the reentry decision correct. 25% chance to repeat that decision over a 25 to 50 year investment time horizon. We think that's a really difficult proposition to get correct. And that's why instead of selling and locking in losses and creating that difficult reentry decision, we want to focus more on creating an investment strategy that is aligned with your financial plan, that is aligned with your risk tolerance, so that you can better weather the volatility. And, we look at these, we show our clients charts and data, the dimensional matrix book, the probability of the S&P 500 or various other sectors of the market being negative over a 10-year period, there's a little less than 1% chance of that happening. It happened from 2000 to 2009, and it happened during the Great Depression. And so if we can work from those frameworks and fundamentals, we can help craft an investment strategy that suits your specific plan. You're listening to the Ascent with Crestmont Private Wealth. I'm Alec Walker, EVP of Financial Planning, talking about the benefits of remaining invested and the challenges of trying to time the market, get in and out, and what that can do to your portfolio. The other thing that we had talked about during our last discussion on the markets was the correlation between earnings and the S&P 500 going back to 2000. The correlation between those two is 96%, extremely, extremely high, meaning that if earnings are rising, there is a high probability of the S&P 500 price rising as well. And so just a quick check-in on early first quarter results. So far, it's very early. 32 of the S&P 500 companies have reported so far. But I'm looking at the current news, about 78% have beat their earnings estimate, and about 84% have beat their revenue estimates. Earnings are up 30% year over year, and revenues are up as well. This is pretty well aligned with recent historical averages. And so this is a positive sentiment going into Q2. Now, what are some risks? What could happen here? Companies could obviously, reduce their guidance, meaning saying that, hey, we've reported strong earnings in Q1, but we're not expecting those strong Q2, Q3 results because of higher oil prices, higher energy prices, things like that. So it is something that we'll be continuing to monitor and see how things progress throughout the rest of the year. On a sector level basis, I do think if peace talks continue, tensions in the Middle East start to subside, I do think the focus for investors and, kind of what we're reading in the news will start to shift back to AI boom, a lot of concentration in those sectors. That's obviously an industry that's driving a lot of the market performance. And so far, early results, companies linked to the AI sectors, 80% of those are showing to beat their earnings and 90% beating revenues so far on companies reporting. So there does tend to be some strong economic growth in the market. And as we said before, I think the second area that investors are going to be focused on is the Fed and what they're doing with interest rates. It's looking like they're not going to be as aggressive cutting rates, but we have a potential new Fed chairman starting later this year, so that could change as well. You're listening to the Ascent with Crestmont Private Wealth. I'm Alec Walker, EVP of Financial Planning. So we've now made it through the tax deadline, unless you're filing an extension and waiting till October 15th to finalize. So what we're doing right now with our clients is we're gathering their 2025 tax returns to help us, be planning for later this year if we need to make any charitable contributions, if we need to check in on estimated tax payments, if we need to do some charitable giving analysis. So if you're listening to this and you've got a copy of your return, please reach out to myself or Rebecca Petrie so we can get that in our hands to be able to do some analysis for you. The other thing that I think it's important that we've been talking about recently, and this is, I think, a pretty good time of year to start having these conversations and discussions, is a review of your estate plan. We're through the busy tax time. We're not yet quite at maybe some more end-of-year, time-sensitive planning that needs to get done. So I think during the summer and early fall, if you've been wanting to review your estate plan and haven't yet done that, please reach out to us and let's start that conversation. So as a quick reminder of, kind of what happened with some of the estate tax law changes. So last year, under the One Big Beautiful Bill, the estate tax limits were increased to $15 million, the estate and gift tax limit per spouse. So that means as a married couple, you would have to have an estate valued over $30 million to be in a situation where estate tax planning, complex estate tax planning would be highly recommended. So what we think that this year provides is an opportunity for, kind of a check-in on your estate plan. There's no urgency that something needs to get done, but it may be a great time to review and make some tweaks. This could be related to updating a trust, reviewing your current beneficiary designations, changing executors or trustees on your will, updating powers of attorney, financial or medical. If you've got, maybe a sibling was listed as your power of attorney, and that sibling, maybe is diminished in their capacity, and you would rather pass that decision-making power on to your child. Those are things that we can review. So how can Crestmont maybe step in and assist with our clients on this? I kind of used the baseball analogy when we were talking last year. So estate planning, maybe that's probably where we're going to want to call in a specialist. We're going to want to call in a setup man, the estate planning attorney, to actually implement any changes that we decide make sense on your trust, wills, powers of attorney, things like that. But we do have some tools in our technology stack where we can actually take existing copies of your trusts, of your wills, of any estate-related documents. We can review that in a quick and concise manner, print out a very clean summary versus looking at a 20 to 30 page trust document with a bunch of legal jargon, boilerplate items in there that may be confusing to most casual investors or clients. We can kind of cut through all that noise, generate a quick and concise summary for you to review, a very visually appealing flow chart where you can see, okay, what happens after I pass away? How do things transfer to my spouse? What happens after my spouse passes away? How are things currently written to transition to children, trusts, etc.? And so we can review that together. If we notice that there's material things that need to get changed or have changed in your situation, we can then connect you with an estate planning attorney, or you go back to the attorney that you've already worked with and get those tweaks modified and updated correctly. So that's step one. And then number two, beyond that, we can have a discussion on reviewing your account designations and beneficiaries. So maybe we need to modify or update your beneficiaries on your 401ks, IRAs, life insurance policies. Or maybe we need to discuss your non-retirement account titlings. You could have a individual account, you could have a joint with rights of survivorship account, you could have a joint tenants in common account with your spouse. Those different account registrations will flow differently to your beneficiaries and through or avoid probate based on the designation. And so we can talk through how those mechanics will work. And if you want to make any changes, we can then go in and implement those. So there's a lot of different things related to the estate plan that we can discuss right now. And I would say, number one, if you don't have an estate plan in place, let's get that process started. Let's have a conversation and connect you with an attorney, whether it's in the Houston or Boerne area, to get those needs taken care of. You're listening to The Ascent with Crestmont Private Wealth. This is Alec Walker. By the time this is being aired, I think the Rockets and Lakers will have played their third game. So let's hope that my disciplined fan viewership aligns with our disciplined investment approach for our portfolio, and maybe we can get a little bounce back on the Rockets' performance in this series. If you have any questions about your investment portfolio, about estate planning, please feel free to reach out to our team. You can visit our website at crestmontpw.com or email us via info@crestmontpw.com. Thank you.